Bank Negara Malaysia said its Monetary Policy Committee has decided to increase the overnight policy rate by 25 basis points to 2.25% as the unprecedented COVID-19-driven conditions that necessitated a historically low OPR continued to recede. Correspondingly, the ceiling rate of the OPR corridor has been increased to 2.5%, while the floor rate is now 2%. BNM says that amid the positive growth prospects for the Malaysian economy, the MPC decided to further adjust the degree of monetary accommodation. The central bank believes that at the current OPR level, the stance of monetary policy remains accommodative and supportive of economic growth. BNM says the reopening of the global economy and improvement in labour market conditions continue to support the recovery of economic activity. However, going forward, BNM says the pace of global growth is expected to moderate and will continue to be affected by elevated cost pressures, the conflict in Ukraine, global supply chain conditions, and financial market volatility. On the Malaysian economy, BNM says the economic activity continued to strengthen in recent months, with exports and retail spending indicators affirming the growth momentum, supported by the country's transition to endemicity. Growth will continue to be supported by firm domestic demand, while the reopening of international borders since April 1st, 2022 would facilitate the recovery of tourism-related sectors. The central bank warns that downside risks continue to stem from weaker than expected global growth, further escalation of geopolitical conflicts, and worsening supply chain disruptions. On inflation, BNM says year-to-date headline inflation, as measured by the Consumer Price Index, averaged 2.4%, while the country's inflation is projected to remain within the 2.2 to 3.2% forecast for the year. Headline inflation may be higher in some months due to the base effect of electricity prices. Nevertheless, the extent of upward pressures on inflation will remain partly contained by existing price controls, fuel subsidies, and continued spare capacity of the economy. This is MPC's second hike to the OPR for the year after its 25 basis point hike in May that raised the rate from its historic low of 1.75% to 2%. The 1.75% OPR had been maintained since July 7, 2020, when BNM cut the rate from 2% due to the COVID-19 outbreak. Bursa Malaysia closed Wednesday in the red amid heavy profit-taking in plantation and energy stocks. The FBM KLCI slipped 19.96 points to 1.39% to end the day at 1,420.85 from Tuesday's close of 1,440.81, marking its lowest level since May 19, 2020. Overall, market breadth was negative amid broad selling as losers thumped gainers 717 to 208, while 388 counters were unchanged, 910 untraded, and 7 were suspended. Total turnover increased to 2.16 billion units valued at 1.63 billion from Tuesday's 1.99 billion units valued at 1.21 billion ringgit. Panama quotes Rakuten Trade VP of Equity Research Tong Pak Leng as saying that he expects investors to remain jittery given the heightened global volatility, although bargain hunting may set in. He expects the FBM KLCI to stay in consolidation mode and hovering within the 1,420 to 1,440 range for this week. The weakness in the local bourse was also in line with most regional markets, dragged by the slump in commodities prices that caused heavy sell-offs in energy and material stocks. Also hurting sentiment was the surge in COVID-19 infections in China as it reignited worries about potential lockdowns. Regionally, Singapore's Straits Times Index eased 0.07% to 3102.04. Japan's Nikkei 225 sank 1.2% to 26,107.65, and Hong Kong's Hang Seng Index declined 1.22% to 21,586.66. Perusahaan Automobil Kedua's outstanding orders have piled up to more than 200,000 units thus far. The car maker says it aims to fulfill the orders by the first quarter of 2023, making sure its customers will be able to enjoy the sales and service tax exemption. President and CEO Datuk Zainal Abidin Ahmad says the group can produce about 28,000 units of cars a month, and based on that production level, it means that it should be able to fulfill the order backlog by end March 2023. According to Zainal, bookings for Perodua cars shot through the roof since the Ministry of Finance announced that the SST exemption for passenger passenger cars would expire on June 30th. A total of 25,100 vehicles were booked on the last day of June, marking its highest ever car booking number in a single day. Despite the backlog, Zainal is confident that Perodua will achieve its 2022 car sales target of 247,800 units, adding that the group has resolved the chip shortage issue, which could smoothen car delivery. When asked if Perodua faced any booking cancellations from customers due to speculative bookings, Zainal cites the cancellation number as being very low. Following the end of the SST exemption, Zainal says the group is still monitoring the sales momentum. Also, despite the rising cost of raw materials following the weakening of the ringgit, Zainal says Perodua has in place cost reduction measures to cushion the impact so it can maintain the pricing for its cars. DSR Tyco made a strong debut on the lead market of Bursa Malaysia today, opening at 92 sen, a threefold increase over its reference price of 30 sen. It ended the day at RM1.31, which is more than 300% over its reference price. Bernama quoted DSR CEO Dato' Ng Liang Po as saying that the group had raised gross proceeds of 25.75 million ringgit, making it the highest amount raised through a lead market listing so far. He explains that the funds will mostly be utilized for the acquisition of durian plantation land in Bentong. This will help to increase the group's durian yield, which will allow the group to venture into overseas markets. DSR owns 33 parcels of durian plantation land in Raub and Bentong in Pahang, with an aggregate land bank of 40.08 hectares. Ng says that prices of durians are mixed and based on locations, adding that in Raub and Bentong, the Musang King durian farm price had increased to 55 ringgit per kilogram, compared with 38 ringgit per kilogram last year. He says there were several factors that contributed to the higher price, such as higher demand and lower supply, as well as unfavorable weather. Currently, the company's products are being sold online and are also available in physical stores, such as its Damasking flagship stores, as well as selected Daily Fresh kiosks due to its partnership with Daily Fresh International in developing a variety of downstream durian-based products. Malaysian Genomics Resources Unit MGRC Therapeutics is collaborating with Rinani Genotech to offer sports-based genetic tests. In a statement, the group said Genotech, a biomedical technology firm focusing on stem cell treatment and genetic testing, now offers a direct-to-consumer sports and fitness DNA test, which enables individuals to better understand their genetic profile in sports and fitness-related areas. MGRC Executive Director Dato' Elvin Joseph says the collaboration is another important step towards realizing its vision of becoming a premier integrated life sciences company. He explains that by partnering with experts in sports sciences, the group has now pioneered a genetic screening profile specifically designed for professional and amateur athletes and everyday fitness enthusiasts. The test results include categories such as energy metabolism and utilization, muscle performance, response to cardiovascular training, weight management, nutrient metabolism, bone and joint health, and mental ability and performance.